Bitcoin on Wednesday hit a new all-time high of more than 66,000
Now
US
it's starting
dollars.
to actually gain some
If
traction.
you're stupid enough to buy it, you'll pay the price for it one day.
It has quintupled in value over the last year.
Elon Musk makes one of his riskiest bets ever.
Money is just a number in a database.
We're talking about a decentralized
world. The supply of dollars can never be sufficient to satisfy the debts that it creates.
Bitcoin Taproot is here, what it is and how it will benefit Bitcoin. Joe Biden signs a $1 trillion infrastructure bill in response to 6.2% inflation, and the Apple CEO, Tim Cook, has confirmed that he owns cryptocurrency. Welcome to All Time High, a crypto podcast. I'm your host, David Vader, and here is my co-host, the lovely Swerty. How you doing, man?
I'm great. Thank you for that introduction. Really looking forward to the news. I thought it was going to be a slow news week.
Every time that I think it's a slow news week, I look back on the week and I see, oh my God, all of this stuff has happened. It's very exciting. Let's get into it.
It's the greatest roller coaster of our generation. And I think it's just getting started, man. So one of the news articles we were talking about, and of course, this is a pretty interesting headline, that the mining indicators suggest the bull rally just beginning. So this is a type of signal analysis that people use, and it's called the difficulty ribbon compression indicator, and also the Bitcoin hash ribbon indicator. Now, these are technical terms. They're kind of fancy, but essentially what happens is when you get to a certain range on this graph that these moving averages create as a crossover point, it traditionally, historically on the charts, signals a larger bull run. And what we're seeing here are numbers that suggest we're at the beginning of a large bull run. And if we go by what Plan B has sort of been suggesting with the targets for November and December, that could be the case. Although we do have quite a lot of ground to gain if those numbers are going to come true. So yeah, let's see how this pans out.
That's right. I mean, I hear the rhetoric repeated in the Bitcoin community quite often, but it is still relevant. And that is that history doesn't necessarily repeat, but it does rhyme. And so when you're looking, and particularly when it comes to metrics like on-chain metrics, because this is how people are behaving, not what they're saying they're doing. You know, in the stock market or in scenarios where you can't really see how people are moving their assets, you know, people can say that they're buying a certain, maybe they're investing in gold because they're worried about inflation, but you don't really know 100% if they're doing that.
That's right.
The great thing about on-chain analysis is you can see how people are behaving, not what they're saying. And so, you know, you're judging the market based off of that. And according to, you know, the indicator that you're talking about, and a variety of other on-chain indicators, this bull market is just beginning. I was reading an article about the supply of Bitcoin that actually is remaining on exchanges. And this is something else that a lot of on-chain analysts use as well. 12.9% of the Bitcoin supply is actually remaining on the exchanges.
Only 12.9.
12.9. It's not a lot. And considering where, you know, a lot, that basically means that a lot of people are hodling for the long term. And if that's truly the case, there's essentially this supply shock that is accelerated. We already have a supply shock that's taking place because the amount of Bitcoin that's getting mined is getting less and less. But
that's right.
The addition of, you know, people holding this for the long term creates a very small amount of Bitcoin that's actually available for purchase and for trading on exchanges.
And that's classic supply and demand. As the supply gets restricted and the demand is high, the price will rise. And essentially what we need is a couple of billionaires or a couple more governments to print some more money. Money printer go brrr, and you will see those movements. You will, and that's like, people underestimate how much Bitcoin can move. We've been really spoiled with crypto over the last few years, and seeing gains of, you know, 500%, 1,000%, 10,000%. Like, how much is Bitcoin up? It's like 18 million% in a couple of years, or even billion. I can't remember, but it's ridiculous. We've been spoiled compared to classical assets like stocks or gold and even housing prices. So yeah, it's very interesting. And, we've got a few billionaires, like one article I was reading about Tim Cook saying that he actually owns crypto and he's been interested in it for a while. He's doesn't specifically suggest that people should invest in it. And he's got a reasonable amount as part of a diversified portfolio. And I think a lot of billionaires would have this. I think a lot of banks would as well. They're underplaying how much they are interested in it and how much they have. They would be stupid not to. You'll have fringe billionaires and fringe banks who won't touch it. They're fine. There's plenty of money in the market. But let's be real. It's not going to take much money for these guys to get invested into crypto. And they have huge pools of liquidity to play with.
Absolutely huge pools. And, Tim Cook being on the cutting edge of technology, he's in the position where he kind of understands how to buy Bitcoin, how to buy large amounts of Bitcoin and store it safely and all that in this unregulated, relatively unregulated environment. But as soon as the regulatory framework is clearer, the institutional investors will start to come in. And then you won't just have CEOs like Tim Cook buying. You'll have the entire company, Apple, taking a portion of their balance sheet, which is currently sitting in cash. And Apple is known for having a lot of cash on their balance sheet. They're converting a portion of that to Bitcoin, and they're doing that through the regulated channels that are much more safe. It's fascinating to have him as an advocate and have him, pioneering essentially the space.
He's a great voice for it, isn't he? Someone who's at like the forefront of tech and public notoriety and, wealth.
That's right. And these billionaires need to do it because they need to protect their money. At the end of the day, we have raging inflation. We had China come up with inflation figures pushing 30%, which is absolutely ridiculous. Of course, China's out of control with that stuff anyway. But the only way to hedge against that is, what do? You got to buy assets. You got to put your money in something, because otherwise it's going to be worth less.
Yeah, China's had quite a few issues recently. And I think a lot of the supply issues, they've had to deal with this for a few years. Of course, COVID being a serious problem for production and for supply chains. The fuel issue is massive in China. I think that's part of the producer price index, which is their basket of it's up 13%, but it's fuels and diesels which are actually rising above 30% in some places. And traditionally you can't print your way out of inflation. And we just saw Biden signing the $1 trillion infrastructure bill into law officially. And they're claiming that it's not going to cause inflation. This will be the answer to inflation, or at least it's going to help create opportunities to curb the inflation, to control what's going on. With the US, I think they are a bit of a special candidate for being able to control world markets. So this control of world markets the US has been essentially the world's Federal Reserve currency. I don't know the macroeconomics of how that's going to interact with world markets. I don't know many people actually do. I just know that historically, when you read about inflation, you cannot print your way out of inflation.
It's funny that the Biden $1 trillion infrastructure bill kind of makes me think about this Twitter thread that I saw recently about the Cantillian Effect. If you don't know about that, I definitely recommend any listeners read into what the Cantillian Effect is. But basically it's this idea that the flow of money, where it starts, the origin of it, who prints it, they always benefit the most from the money. And a simplified example that I read was, if you're a part of a very small town where there's not a huge amount of money circulating, and suddenly you get $1 million rock up on your doorstep, you get to spend that into the economy, with the dollar value being what it is now. After a week, 2 weeks, maybe a month, that money has circulated in the economy, and suddenly the prices start to go up to reflect the increased demand. But the first person to be able to use it gets more benefit from it. It makes me think, like, the US being the world reserve currency, maybe that enables them to use it more. I don't know. My thoughts aren't super clear on that, but yeah, it's very interesting.
And I think essentially what happens is with poor people or those at the bottom end of that, they face a situation where there's a change of the value of the currency, that there's a large amount of currency suddenly put into the circulation, and now the price has changed, and these people won't have the buying power they did before, but they're also not positioned to be able to handle that kind of supply shock. That's essentially kind of like what neoliberalism is. It's like the trickle-down effect. People hear about this, and it's the idea under the Reagan era kind of really pushed that one in.
Trickle-down economics.
Yeah. And the idea being that those at the top will get the bulk of the tax cuts or the stimulus packages or whatever have you, and they will be able to then give this money down to the poor.
But of course, by then it's worth less.
It's worth less, and they've taken the lion's share and they've eaten their fill, and c'est la vie.
It's great. There's actually a cool movie that I saw on Netflix, which was, I think it was in Spanish. I forget the name of it. I'll pop the name in the description when I think of it. Basically, it's about this weird giant cube-like trap. It's kind of like a saw trap where there's about 150 levels or something like that. And in the center is this giant elevator of food, and it starts coming down. So the people on the top level get to eat their fill. And then whatever's left over goes down to the second level, and whatever's left over goes down to the third level, et cetera, et cetera. And by the time you get to the 50th and 60th level, there's nothing but scraps and maybe a drop of wine left. There's just nothing there. It's kind of the same with trickle-down economics, I suppose. I guess that movie is a metaphor for the whole thing. But, at the end of the line, the poor people are the ones experiencing the surge in inflation. And I find it very interesting that the juxtaposition of Biden signing this $1 trillion infrastructure bill, creating a whole lot of stimulus in the economy, right on the back of 3 or 4 days earlier, the releasing of the 6.2% inflation figures. The Australian stock exchange here at home tumbled on the back of unemployment rate jumps, and all of these economic indicators aren't positive and aren't calling for immense amounts of spending.
Yeah, well, as we've seen, the ASX took a bit of a tumble, and this is kind of in response to the news coming out that we've got inflation issues across the world. We have there's unemployment rate has risen in Australia. This isn't actually, unemployment rates are interesting depending on how they define them with casual workers or those who are full time. I know that the US and the Australian have different systems that they measure these two things, but it is really interesting how these numbers are connected, and that inflation's come out much higher in certain countries around the world, and countries are printing more money, and unemployment is higher, and we're having supply issues. I can't remember the French phrase for it. It's like history set a repeat or whatever it is. I think it's in the Rugby World Cup. One of the teams has it on their Guernseys or something. Anyway, that's vague, but history really does tend to repeat. And unfortunately, we don't have a very long memory, or at least those in positions of power who control the supply of money, the printing. I think we were talking earlier in the week, Biden's decision to do this, as if he doesn't understand what he's doing. I think essentially he does. And this is one of the problems with countries. The average person isn't ready to hear, we're going to have to take the money away from you, and you're going to have to tough it up for a few years. And there's going to be less money because if we print more money, it's going to be worth less. People don't understand these concepts. So the hands of the politicians are kind of tied. Their position is forced. They essentially kind of have to use quantitative easing or the yield curve control methods. There's others as well, like these infrastructure bills, which they try to ameliorate the debt issue and the supply issue over a longer term to allow other parts of the economy to change. But essentially things are changing, and I'm not sure if they're going to be able to control it. The next few years are going to be really interesting. We tend to talk a lot about inflation, but it's super important and super connected to Bitcoin. And I'm going to segue.
Go ahead. By the way, just on that note, before you segue, you mentioned like people aren't ready to hear that they needed to tighten their belt for maybe a few months or years. At this point, US debt being 28 trillion. At the time of recording, it'd probably be 29 trillion. by the time we're released in a couple of hours. That's not a couple of years. That's a lifetime of tightening your belt.
Time. Yeah, unfortunately it is.
Yeah.
We're talking
Sorry, go ahead.
generational problems here. No, you're absolutely right though. So part of this this pivot and this generational change that we're seeing is the metaverse is the most common term that's been Googled this week, I think, or at least it's up there. And Seoul, the Korean capital, South Korea, has just announced that they're going to do a public service platform in 2022. And the initiative, it's like basically the metropolitan government has come forth and they're like, look, we need to do a contactless communication channel in the post-pandemic era. And most countries need tourism. They're going to start embracing the change. It's who wouldn't take that kind of opportunity to use all of these new programs that have been invented, like Zoom and all these connection networks, people working from home, the changes in literally the change of the world is now happening. Yeah. So they're going to start building this metaverse platform, this ecosystem to connect people. Mostly it's going to be economic, cultural, tourism, education, civil services. So it'll start with, I imagine, council-based initiatives like come and look at the old museums, or here's like a tourist step-by-step kind of guide through the city. And that's going to create a lot of new jobs. They're going to need visual graphics artists, coding, design, music, software engineers, people to develop this system. And it's going to be complicated. It's going to need fundamentals like blockchain, NFTs, and the companies associated with this are going to be very interesting to watch if you're investing in something you're interested in. Blocktopia, what's the other one? Decentraland. Yeah. These are, at the moment, they're kind of like they're platforms which people can buy land, and they use the tokens there. But this is kind of part of that connection. And of course, governments and video games are going to drive that.
Yeah. In the Bitcoin community, you hear a lot about like hyper Bitcoinization, which is essentially this idea that everything is going Bitcoin. And this is really part of that. It's maybe not Bitcoinization, but certainly decentralization and virtualization.
That's right.
There's the creation of a new world that's taking place right now before your very eyes. It's so important that you educate yourself on what this all is, because cities are now doing it. Governments are now doing it. We had
countries.
Literally countries.
El Salvador.
Yeah. Seoul. And of course, Miami is giving Bitcoin to its citizens and allowing usage for payments. Like this is, using the platform stacks. It's essentially a gold mine in the center of Miami that they're able to pay dividends to the citizens and say, here, this is yours because our city has made it. It's amazing to see large organizations getting behind this now.
It's interesting with that. We were talking earlier about the trickle-down effect, or the Cantillian effect, which is those who get the first contact towards the money and the power, the first contact to that money and power. Yeah. They benefit the most from it before the market conditions change. I am interested to understand how that works with the deflationary asset or currency as opposed to an inflationary one. So Bitcoin essentially being like gold, those who had access to it first, those who get the most first, are going to benefit from this. And they're going to be coming, all things going to plan. Obviously, the plans of mice and men do change. I think, El Salvador, Miami, these early adopters, if this pays off, this is going to pay off monumentally for these people.
Absolutely.
We're talking huge, vast amounts of wealth, generational wealth.
They're going to do very well compared to others. The thing that Bitcoin changes about the world with respect to the Cantillian effect is it moves people from a short time horizon where I got to spend my money this month or this year, or at least within the next 3 years. Otherwise, it's pointless me hanging on to it. I got to spend it. Drives us consumerism, changes that very narrow time horizon to a very large, long-term time horizon where I'm thinking instead, what am I doing in 10, 20, 30, maybe generations down the track? How can I store my wealth for them? You learn a lot about this in the book, The Bitcoin Standard by Seyfedin Amosus.
Great book.
By the way, one of the fantasy interviews, maybe one day, once we get an audience on this podcast, we can interview him. But Yeah, very, very, very fascinating change, and it will be interesting to see how it plays out with respect to decentralized currency. Because, of course, this is not going anywhere. We're moving now into the next phase.
That's right. And one of the phases that Bitcoin has actually changed this week, and this is a technical change. And when I first read about taproot, which is the name that the coders and the people who are developing the behind the scenes work on Bitcoin have labeled this, I was curious as to how can people actually change Bitcoin? How are they allowed to change this? How can they get in there into, like, and what are they changing? And so essentially we've seen a couple of forks, and soft forks are when everyone essentially agrees upon a change in the way that the code operates. Now we're not talking deep fundamentals of the code. This is essentially stuff because we've seen the Lightning Network come in for allowing for faster transactions speed.
Yep.
And essentially Taproot is a soft fork, and everyone had to agree on this. Anyone who's developing the background code, anyone mining, and users in general, people who operate nodes, they all had to agree to this change before it would come into effect. And
it took a long time too.
It did. It did.
As it should, because people need to review the code and everything like that, make sure it's above board, and any changes should be slow because it's serious. And this is a good one.
That's it. And essentially what happens is once everyone agrees upon this new standard, they release it into the system. I don't know the technicals of how that works, but there's coding and back-end stuff that goes on. And these people then release a change into the system. Now, the Taproot is about increasing privacy. It's about improving speeds and transaction costs. It's also about the way that signatures work. One of the issues has been with multi-signatures, and this is what's called the Schnorr. I'm not actually sure how to pronounce this. Schnorr signatures is they can take multiple keys inside a complex Bitcoin transaction and just basically compress that into a single unique signature. And that means everything is much, much faster. A lot of crypto altcoins and alt blockchain technologies come out and they're like, hey, we're heaps faster than Bitcoin. We're faster than this. We do things better. So essentially what this is doing is improving Bitcoin up to the same kind of speeds to handle those same sort of transaction volumes and costs. And that signature aggregation is what it's called, is going to mean that the amount of data stored and transacted is reduced greatly. We can have more transactions per block and lower fees. And these are all wonderful things. And privacy is improved. So Bitcoin is getting better. Yeah. Essentially, it gets better every time someone joins as part of a node system, but it's getting better and better. It's integrating kind of like a neural network. One of the things I was reading this week is the topography of the way they're viewing nodes and how everything's interacting on a really large scale. It's starting to act like a neural network in the ways that information is kind of pulsed around. And this is what we're going to start seeing more and more as more people take on Bitcoin. It's going to start reacting like a social science in a way. Because it's going to be not just governed by a few people. It's going to be, again, part of a market which is structured by human intentions.
That's right. I mean, it's really fascinating, man, this whole decentralized organization. I was speaking to Callan from CryptoGate a couple of days ago. That podcast will come out shortly after this one, talking about Australian tax law around crypto and stuff. But we kind of got into the weeds a little bit around decentralized organizations and how that works. Because for the longest time, a group of people couldn't even meet if you had some obscure hobby. Let's say you really liked to collect stamps, but only from a period between 1928 and 1930. You can't meet anybody else that does that in your local town. So the internet comes along. Suddenly you've got social media platforms, or, first it started as forums, now it's social media platforms. And what you could do is you could suddenly meet people that also want to collect stamps from 1928 to 1930, which is awesome. But you can't really do much more than discuss it and talk about it. What you can do with DAOs, decentralized organizations, is you can now form an organization and buy a bunch of stamps. Or maybe you can buy, digital, virtual NFTs. whatever it is, you can now act as an organization without a central agency. You don't need to go and set up an LLC or a PTY LTD in Australia to go and do that. You just have a DAO in place and you fund it with decentralized money and you run it with decentralized votes, and the world is hyper decentralization is occurring right now in the world. It's very interesting.
I think that's a great summary and a great place to leave this one today, man.
Cool. Let's wrap it up. Any last thoughts, Swarty?
Education is intrinsically important for the future, for your own life right now. Understand terms like inflation, deflation, understand how to hedge against them and how to invest in your own future.
That's right. If you're the type of person that thinks, I wish I would have learned about Bitcoin in 2013, 2014. You know what? You probably heard it somewhere in your peripheries, but you didn't think to educate yourself on it. It certainly happened to me. You hear terms now like DeFi. Maybe you don't understand what it is, or DAOs. You don't understand what it is, or inflation or economic terms. You don't understand what it is. Important. Take the time and learn about it, because this is the most important shift, I think, in our generation.
What's the saying? The best time to plant a tree was 20 years ago. The next best time is today.
And that's a really good spot to leave it. Thanks so much for joining, Swarty. And thanks to all the listeners for tuning in and reviewing us on iTunes and giving us comments on YouTube. It really means a lot. We're a small podcast right now, hoping to get bigger. Really appreciate it.